I work as a senior program associate with the Creative Economy Practice at CC Hub, and I'm based at the Lagos office. Please kindly settle in as the session is just about to start. Today, we are going to be examining the topic, proper financial management, expense management, proper internal control, and revenue management. Welcome once again. Please, while you wait, check your sound and camera, and please turn on your camera if you can. And in the chat box, please kindly input what you are looking to get out of today's session. We are looking for your comments. So in the chat box, please just write to us and let us see what you are looking to gain out of this session based on the understanding of the topic. I will visit our ground rooms once more, and then, like I mentioned the other time, switch on your camera if you can. Use the chat box to ask questions. Basically, we have been using the chat box to ask questions, and it still remains the same. Your microphone remains muted, and you can only communicate to us using the chat box, and you can only communicate to us and the facilitator using the chat box. If you have any questions, you have any comments, please endeavor to use the chat box to pass across your message. We won't be accommodating raising of hands, so please, if you have any questions, like I mentioned the other time, use the chat box. Participate actively and give space for others to also participate. Please also note that interpretations are available, so click on the round interpretation icon button to choose your preferred language. Today's session will be today's workshop is aimed to help participants achieve the following: implement efficient expense management system, create effective internal controls for revenue and financial management, adopt best practices for financial planning and management, improve the participants' confidence and exposure to financial budgeting and analysis. Today's facilitator, I'm pleased to present to you Abiodun Ajanaku. Abiodun Ajanaku is a finance management consultant and is currently the CFO at the Co-Creation Hub Group. So without further ado, I present to you Abiodun Ajanaku, who is our facilitator for today. Abiodun, thank you so much, and thank you for obliging us, and thank you for doing this at this time. Good to have you on this call today.
All right, thanks a lot, Omolabake. I'm very excited to be here. I believe everyone can hear me now. Yeah. I believe everyone can hear me. All right, good. So thank you once again, Omolabake. I'm also very excited to be here. Massive opportunity for me to share knowledge on best practices of financial management, based on my experience, based on best practices, and based on what is obtainable over the last 12 to 13 years, supporting startup within the tech ecosystem. So I will just go straight into it. Everyone knows why we are here. The objective is to introduce everyone into the best practices of expense management, internal control, revenue projections, and many more, right? Like I always assume, everyone on this call have one reason or the other why they came on board for this webinar. And then I'm sure at the end of this webinar, the objective will be, or the aim would be, to have introduced everyone to the basics of expense management, the processes and how to implement a top-notch revenue projections, and the basis of having a good internal control that helps you improve your operations, that helps you complying to financial reporting, and that can also help you reduce your risks depending on your kind of operation, etc. So I will just go straight into it. I will try and make the session very lively, very engaging, and leave room for questions as much as possible. And if you have any question, you can always raise your hand or let Omolabake know that you have something, a burning question you need to ask. I always start off to give you background information about some of the research I've had in the past, mainly around talking to startup, helping them to understand why financial management is very important, and also in that research, I gained insight as to why people actually set up their financial management system. So in 2011, I had the opportunity to talk to about 30 to 40 startups. And then I basically asked them why they think they need a financial management system, or why they think it's important for them to have a top-notch financial management system. 50% out of that, the 40 startup I spoke with said, well, they don't need financial management system because they do not have accountant, so there's no need for that, right? Another one said, another 30% said, oh, we don't need financial management system because we have not started making money, so there's no need to have any top-notch financial management system. And the last 20% said, we have a compiling business model, so there's no need for financial management system because it's not important in any way. And my response to all of these startups that I spoke with is, financial management system is what set up your business in a good and create the foundation for you to build wherever you want to be. You can have a fantastic idea about your product, your market, etc. But if you do not have a system that clearly help you manage your cash flow, that clearly tells you what is coming in, what is going out at every point in time, you will struggle as a business. And if you're not careful, you might see yourself out of business sooner than later. So financial management is what connects a business together. It's what helps you quantify your business idea, quantify it in a very clear manner for you to understand how your business is performing. For every business globally, every business in the world, at every point in time, periodically, you want to sit around the table among your team to say, okay, how are we doing in terms of spend? What is our burn rate, right? What is our margin? What does that look like, etc. So, I mean, these are conversations we are going to be having today. And it's very important we set that tone so that everyone understands what are the best practices of financial management. And I think this research that I did is just to give us an overview of why financial management system is very, very important. So, yeah. So before we move to the next slide, so we need to do a quick group exercise, and you can just type it out in the chat. Please tell me or tell us what tools you use to manage your financial management system in your sector, fashion, textile, and yeah, what tools do you actually use and why do you choose that tool? In terms of tool, I mean, what kind of accounting software do you use? And if you don't use software, how do you manage your books? Do you use Microsoft Excel? Do you use a manual document, etc.? So I'm seeing a lot of response: Excel, QuickBook, Zoho, I use Excel, Bonjour, yeah. I use expense management system, manual, book, Google Sheets, QuickBooks. This is fantastic. I wish I can do a word cloud where I can put all of your response in a word cloud. We will then see which one is common. We use Keeper and then fantastic. I use manual, fantastic. Yeah, so fantastic, Excel, fantastic. I use Excel, okay. Okay, so I mean, it's interesting to see the different range of tools, methods that people use to keep their books. I mean, whatever tool you use, the most important thing is you want to have insight into how you perform as a business, right? But I think in this day and age, I mean, the COVID pandemic has actually exposed us that it's very important to automate your finance operations, right? Finance is very broad, and because it's very broad, there are certain areas that have to be automated. So regardless of the tool you are using, the most important thing is if your tool gives you insight into the money that goes out, the money that comes in, then it works. But a bit of advice to the people using manual process, like Excel or using a book or whatever. With Excel, it can get complicated if you are not proficient with Excel. And Excel is very good, but you get to a point where it's very, very limiting if you are not very proficient. So kudos to everyone that's automated the process using Zoho, using QuickBooks, using Bonju, using all the automated, So if you are doing it manually or using Excel, it's very, very limiting anyway. So let's keep going. What is good about financial management system? Yeah, like I said, what is financial management system in the first instance? It's just a process that enables you to manage the financial affair of your business. What is financial affair of a business? Money that comes in and money that goes out. Simple as that. The combination of money that comes in and money that goes out is what we call cash flow, right? Cash flow simply means what goes out and what comes in. And in your cash flow, there are a lot of activities that happen depending on the life cycle of your business or depending on the stage of your business, right? If you look at any typical startup or any typical business, so you will see them. I see people saying they use Wave as well. Wave is fantastic, as well. So businesses go from startups. In that startup phase, you can be there for between 1 to 5 years, depending on how quick you are growing. Then you go to growth and you go to maturity, right? Financial management system is important at all of this stage. We can see stay to the previous slide. It's very important at every life cycle of your business because you're going to make decision around financial management decision, right? Where's the money coming from? Where's the finance coming from? Are we deploying our capital, right? Who are we employing, etc.? You're going to make investment decision, right? Invest in your space, your office space, right? You rent space, you buy equipment. You're also going to invest in other activities that are very critical to you achieving your objective as a business. But financial management system is very important, or financial management is very important because of one, for you to build a very sustainable business and a very viable one, right? You need to have a financial management system that works, that gives you, I keep using the word insight, right? I give you insight into how you are performing, into what is coming into your business, into what is going out of your business, right? If you are going to raise funds at any point in time, financial management is very important because you need to understand what is my funding requirement at every point in time, right? If you don't want to go out of business or become bankrupt, financial management system is very important because that's what helps you to have visibility into what comes in and into what goes out. So it's very important at every point in time for you to have visibility into your financial information. Yeah, so we'll keep going. Element of financial management system, right? It starts with financial planning. And what is financial planning, right? Sitting around the table, coming up with your operating budget for the year. And you can have a budget is typically between, a short-term one will be between 1 to 12 months. A medium one can be between 1 year to 3 years. A long-time one will then be from 5 years and above, right? And it's very important when you are doing your plan, there are 3 things you need to pay attention to. Number one is, where's the revenue coming from if you are doing your financial plan? Those are questions you should be asking your finance people. If you have an accountant, what is the revenue projection? Number 2, which area of the business are we spending, right? Are we hiring more people? That's human resource, right? Are we investing in equipment, CapEx, and whatever you have. And the third one, which is very, very important for you to also get insight into your performance, is ask your accountant, what is our monthly burn rate, right? Monthly burn rate is how quickly, or cash burn, let me use the layman language. Cash burn is how you are spending your money at every point in time, right? A lot of business can have a runway of say 12 months, runway of 18 months on 12 months. So let's say if you have $10,000 and your runway is like 10 months, right? If you divide your $10,000, right, by 10 months, that should be around $1,000 on a monthly basis. That's your cash burn, yeah, or your burn rate on a monthly basis. So I just want to explain that time so that those are things you should pay attention to. I mentioned where's the revenue coming from, which area of the business are you spending, then burn rate. Any other metrics you want to use can be added to these three, but those three are really, really important, right? Financial management system, what sort of system do you need to put in place? System to help you manage your payroll in terms of what you are paying in terms of salary and wages to your employee. System that will help you also manage your invoicing, right? System that will help you keep track of your revenue collection. We call it account receivables, how quickly you are collecting that in. System, your fixed assets, so that there's no theft in your asset control. You need to have all of this system in place at every possible time so that for you to be able to track your financial performance. The next one is financial controls, right? This is the bit I really, really need to amplify, right? It's very important to amplify these because financial control is everything around financial management. You need to have a control in place where there is no leakage in your financial management system. You need to have a control in place for you to have insight into what you are spending, who is giving those approval. So there are three objectives of financial management control. The first one is efficient operations, right? You want to reduce the amount of mistake your workforce are making in terms of maybe invoicing, even in terms of budget implementation for your project, for your product, etc. Right? You need to understand all those processes needs to put in place. When you have processes in place, even for approving expenses, right? There has to be clarity into the workflow for approving your budget. Who submits stuff, who approve, right, etc. So all of these things are very important, right? The fourth one is now financial performance review. At every point, I keep saying performance review is also very important, right? At every point in time, monthly, weekly, quarterly, yearly, you want to look at your plan, your financial plan, where we started from, and ask yourself critical question. The first question is what have we achieved in terms of the what, right? What didn't work, and if there's any deviation, let's address it. Fantastic. So let's talk about the best practices in financial management system. Yeah, and I think that's also very important because we are living in a world where your financial management processes are what will give credibility to you, to your business as a role in front of your investors, right? Your investor wants to know that you have systems that work. You have processes that respect your business, that support your business as a small scale business. And if your business is already mature, you need to have processes that also respect your employee in some way. It's very important to come up with all these processes. But the first thing I always tell people, number one, for you to have a credible or for you to run a sustainable business, right? The first step you need to take is to incorporate an entity, right? In business law, in commerce, we say legal entity. What does that mean? An entity that can stand on its own, an entity that can sue and can be sued. Those are the terms in commerce, in business law, in finance, right? Legal entity. And your entity can be a limited liability company, limited by shares. It could be proprietary, it could be sole proprietor, whatever. But why is that important for you to register a business? You don't want to commingle your personal fund with your business fund. You want a business that's separated from the founder in a way, right? Founder, the owner of the business, well, it gets to a point where you are raising funds, then people come in to give you funds, they then become shareholder, right? Your stake might be diluted at some point. But you need to have a business that is well registered legally, a business that can enter into contracts with partners, with donors, etc. So it gives you credibility, number one. And if a due diligence is conducted on your business, you have all the legal documents to support that, oh, you've registered your business, is a legal entity, you have the right, the license to operate, right? So the next step after registering your business is now opening a corporate bank account. I know some people might say everything I'm saying are not new, right? Yes, they are not new, but these are the check we look at. As a CFO of CCO, if I'm asked to sort of recommend businesses that we can invest in, recommend businesses that are eligible for getting our fund, these are the criteria we look, right? Is he registered? Do they have a bank account? Not having a bank account is one thing. Who are the signatory to the bank account? If you have a bank account that is the founder, one founder that approved the fund, is the founder that prepared the budget, is the founder that spent the money, then that's not a good business. It's not a sustainable one, right? You want to have a business where there are people responsible for certain things. There are checks, there are balances, there are segregation of duties. An admin officer prepare budget, send it to finance manager review, verify, push it to the CFO or your accountant or your finance lead. The finance lead review, give feedback to the accountant or the admin manager to say, I've reviewed this, I'm fine with it, proceed. Then it goes to the final approval of the founder. The founder look at this, I'm happy with this, I'm happy to release it, go ahead. So in every system you create, if there's one thing you need to remember of this call in terms of best practices, there got to be segregation of duty in your finance operations. It's very important. That's principle rule number one, segregation of duty. If you want to have a top-notch internal control, there has to be segregation of duty. So the third one now is now forecasting and budget. In the course of this presentation, we will have a goal at budgeting. How do you do budgeting? What are the elements you need to focus on, right? Why is budgeting important, right? It's important for you to have a clear direction as to what your spend is, perhaps on a yearly basis. And if you got a rolling one, it could be on a quarterly basis. And if you have a short-term one, it's going to be on a monthly basis. So the budgeting system has to happen at the beginning of the year or towards the end of the current financial year, usually in the last quarter, Q4 of every year, that happens. So it's very important we have this in mind, that budgeting is very, very pivotal to building a sustainable business. Right. The next one, which is accounting system and processes. So when we talk about accounting system and processes, finance operation is broken down into myriad of ways, but the top 6 one is number 1, account receivables, that talks about how you provide service to your customer, you send them invoice, or customer come to your platform to place their order, you send them invoice and other stuff. Yeah, that's one bit of accounting system or processes in finance. The second one is account payables, right? If you go back to your respective businesses, those are the questions you should be asking your finance people or whoever is in charge of your operations, right? System that can help you have insight into account receivable, I've mentioned that. System that will help you have insights into account payable. What is account payable? You pay vendors, you pay people that work for you, you pay workers, right? Yeah. The process of making those payments is called account payable, right? That's another aspect of finance and accounting. The third bit has to do with your payroll, right? At the end of every month, you want to have an Excel sheet, or if you have an automated system where you have all the list of your staff, right? The number of days they've worked in that month, right? Their gross salary, then you put in tax, wherever, then you then arrive at the net pay. So you need to have that system for people to, or for your organization to be able to manage payroll effectively. So that's the fourth process of finance I've mentioned, if I'm not mistaken. No, the third one rather. Then the fourth one is going to be, you need to have a process for remitting and collecting your tax on a monthly basis. That different tax that you pay in your respective jurisdiction. And one of the tax you might be paying is going to be pay tax, which is personal income tax, pay as you go. From your payroll, you should be able to extract that pay to the government, right? At the get-go, one of the biggest questions I'm always getting is, at what point do we start remitting tax to the government, right? You start immediately, you have a staff on your payroll. Yeah, you register, get your payer ID reference, you start that. You want to be on the right side of the law. You want to ensure you are 100% compliance from that get-go. Then the fifth one will then be, you need to have a system for managing risks. How do you manage risks? You need to look at your operation as a whole. Yeah, you have different risks: operational risks, liquidity risks, credit risks, etc. Right? You look at every area you are exposed. What kind of system do you put in place to mitigate these risks? Right? One of the biggest risks a lot of businesses face now, in Nigeria especially, right? In Nigeria, it's the forest risks, right? Because there are policy around how forests can be moved within the country, right? Companies in Nigeria now look for a way to mitigate those risks, right? You need to think through that and come up with best practices to mitigate those risks. Another one could be liquidity risks, right? When that liquidity has to do with your cash flow, right? How much money do you have in place to meet your short-term, medium-term, and long-term financial obligations, right? And it has to do with cash, right? You want to ensure at every point you're rendering service or services, or you're selling goods to your client, your partner, your customer, you're collecting your money as quickly as possible. Maximum between 15 to 30 days, collect all your money in as quickly as possible. Statutory, I've mentioned that. I'm not going to overkill that already. You want to stay on the right side of the law, remit your VAT, remit your pay tax, remit your withholding tax to the respective and appropriate tax authority. Internal control, I mentioned already, there are 3 aims for that: efficient operation, you want to reduce error, you want to reduce risks, I've talked about risks, and the third one is compliance to applicable or local requirements in your respective country. Performance review, as a startup, you ought to sit around the table, either at the end of each quarter, to say, how are we doing in terms of the goals we've set? How are we doing in terms of the mandate that we've got? What are the deviations? How do we correct the deviation? How do we then keep moving without making the same mistake, right? Now, we are beginning to enter the technical bits of this presentation, right? So I'm going to slow down now, very, reduce the speed at which I'm going so that it's clear to everyone now. So now we want to talk about the techniques for financial model. What is financial model? Financial model is just a representation or is a process of quantifying your idea as a partner, or quantifying whatever objective or milestone you have in terms of the monetary implication. That's what we are talking when we say financial model. And it's basically you doing your forecast around how much spent, what will be your spend in the next 3 months, in the next 6 months, in the next 8-9 months, in the next 12 months, and so on, right? So there are several approaches you can use in doing your financial projection. Now, I mentioned 3 elements of financial projection when we started off: your revenue projection, your expenditure, right? And the last one will then be, when you are now playing with your revenue and your expenses, how do you make certain decisions, right? Without any financial management skills or principle, you should know that when your revenue is less than your expenditure, it's saying, hey, come on, we can't spend more than we are earning. If your expenditure is more than your revenue, you know that at some point you will get into the red, right? And you want to ensure a healthy financial cash flow at every touch point of your business. So let's start with the techniques for doing your revenue projection. You can base it on your market. There's something we call the SAM. We call, when you look at the revenue from the global perspective, right? The total available market, right? When you look at stuff from a global perspective, right? You can say, okay, I'm into fashion industry. What is the market size of that fashion industry, right? So you are coming from a top, you are taking a top-down approach, right? When you take that sort of approach, you are looking at stuff from the global perspective, right? And you start with the market size to say, what is the TAM? TAM means total available market, right? So you start with that, okay, the total market size of the industry or the sector I am is 40 billion, right? One of the biggest mistakes I see a lot of business make is they now base their projection based on the global market size, which is not realistic, it's overly aggressive, and it's not attainable, because that's where some people can be that ambitious and say, yes, we want to achieve our revenue or tie our revenue to the global market size. But when we finance guys see it, we know that it's not achievable, right? That's the first starting point. The second one is now identify a particular segment, and abbreviation we use for that is serviceable available market, right? Serviceable available market, right? In that your niche that you've identified, right? Let's say, for example, we are now moving from global to your regional sector now. In Nigeria, what is the market size for fashion? Or in Kenya, what is the market size for fashion? In Botswana, what is the market size for fashion? In the UK, what is the market? So you are going down to a particular segment, a particular region, right? So you're coming from global, then in that your region, how much? So from 40 billion, let's say the market size in your region or your country is now, let's say 2 billion or 2 million, right? In that market, you then say, okay, how much of this can I achieve in terms of revenue, right? And for me to be able to achieve this revenue, what do I need to do in terms of customer acquisition and etc., right? How do I position myself to sort of penetrate, that's the right word, that market? How do I put myself in a position to be competitively have the advantage or comparatively have the advantage over your rivals? So it's very important you go from step 1 to step 2. Then step 3 is extrapolate to calculate total potential revenue. From that, your serviceable available market. How do you, so we'll talk about margin. I've seen that question around margin. We'll talk about margin, no worries. So extrapolate from that your market in your region, what from that 2 billion, how much can you conveniently achieve? So you need to look at you can start with your website or wherever, how many customers come to or hit your website, right? From those customers, how many customers are paying customers? So all of these things you need to be able to extract. It differs for all businesses. In your own case, you need to extract that and say, okay, if you're taking a top-down approach, those are the stuff you need to look at, right? Global, regional, and then your business. How much of that regional revenue from that your sector can you achieve? Yeah, that's a top-down approach. Now let's take a bottom-up approach, right? Now the bottom-up approach will then be, you are going to project based on, and I think the best way, well, I can't say I'm 100% correct. Like bottom-up approach can be anything to anyone, to any business. And this is the way I will start, right? From taking a bottom-up approach is, what are the different products that I offer to customer, right? For example, if I'm into fashion, right? The different products can be clothes, can be shoe, right? And can be other lifestyle accessory or lifestyle stuff that your customer are interested in, right? Narrow it down to that extent. So for each of those product category, right? In terms of quantity, how many of those products can you sell conveniently? Let's even start with the short-term plan of 12 months to say, from this stuff, how many of my product can I sell? Let's say product one has to do with clothing. You say you want to say about, you should have said about, sold about, let's say 50 clothing between month 1 to month 12, right? Then the next one would then be, from that quantity, what is the unit, the selling price of that clothing, right? At every point in time, you want to ensure that your selling price is much more than your cost of producing those items, right? Then from that, if you have that done in your Excel sheet, we're going to take some example on how we do this. In your Excel sheet, in month 1, if you say you are projecting to earn based on your quantity of the product you are producing against the unit selling price, let's say your revenue for product 1 is $1,000. So how much growth will that grow from month 1 to month 2? Will depend on the number of products or units you expect to sell in month 2. So the difference between the unit in month 1 and that of month 2, you'll be able to establish what your growth, revenue growth will be. You do that on a month-by-month basis, then you'll be able to have an average for the entire year. So the next thing you need to do is calculate spending necessary to achieve that revenue. Now, we've talked about your product. Now, let's talk about cost of sales, right? There's a lot of, no, we can still stay on that slide. There's a lot of stuff you need to understand in terms of cost of sales. That's what we call the profit margin. And that's what we call the markup. With the margin, you are looking at the difference between your selling price and the cost price all over the selling price, right? With your markup, you are looking at the difference between your selling price and the cost price divided by your cost, the cost price of one product. So I repeat again, when you are doing or calculating your spending per unit, you need to look at your profit margin and you look at your markup. They are basically the same thing, but the difference is you're trying to use, in terms of profit margin, you are dividing by your revenue or your selling price. But in terms of markup, you are looking at the cost. What are the cost elements that go into me going from the actual cost to arriving at the selling price of one unit? We'll look at that in the Excel sheet that we have. Then in terms of headcount and milestone funding, right? For us to achieve our revenue or for us to produce this, what sort of headcount are we looking at? So by the time you combine all your operating expenses in terms of your cost of sales, your ad, your platform, the branding item, marketing, you add that to your operating expenses like salary, utilities, what else again? Insurance for your staff, and etc. You have clarity on what your total expenditure are, then you compare that against your revenue. So we can keep moving now. Rent as well. Yes, thank you for that. Rent as well. So someone asked a question around how do you calculate your margin, right? And how do you calculate, that's what we call break-even point as well. So you look at your fixed asset, and you can only do that when you have clarity around your spend in terms of overhead on a monthly basis. So we will look at that in another example. So I will address all of the questions I'm seeing popping up soon. So we can move to the next slide and look at what else we have. Now, so this is the area that I think it can get complicated again. So how do you then determine your funding requirement? Right? How do you determine your funding requirement? Right? So before diving or introducing you guys straight into this, I would like to break down this entire Excel sheet into something very basic for everyone to understand, right? If you look at this template, we are not going straight into example of what we need to do in terms of arriving. It's also look at it in a way of you developing a financial forecast. If you want to call it budget, it's fine. If you want to call it financial model, it's fine. But I think it's more of a forecast for you to establish your funding requirement. So and when you are doing this, you need to pay attention to what we call the operating activities in terms of your revenue, your spend in terms of operating expenses, salary, rent, utilities, what is again, everything you spend, whether you make revenue or you don't make revenue, those costs are your overhead. You need to establish that in one sheet of paper, right? Or in an Excel sheet, right? Have that on one aspect. Then the investing has to do with, for me to be able to achieve my mandate, translation. Okay, so what I mean with determining your funding requirement is this. You need to understand that for you to be able to build a top-notch financial model, the element of it needs to be broken down somewhere, right? So that you have clarity. And there are three components to your what's it called? To your financial forecast. The first one is your revenue projections. That has to be very clear, right? On a sheet of paper, itemize all your products, yeah? Clothing, category A, clothing, category B, shoes, category D, yeah. For you guys offering service, it could be, I'm hoping to generate revenue for project management, for selling a product or a service that is subscription-based, etc. List all of those out, yeah? On a monthly basis, how many units do you intend to sell? Or what is the volume, or in terms of sales from customer, how many of your customer will be able to pay for this, right? Then establish what would be that unit revenue from one customer, right? Before you even dive into your financial forecast. In terms of operating activities too, you need to have clarity on what your operating expenses are. Things like your rent, things like your office supply, things like your traveling expenses, accounting software, legal, telephone, insurance, interest. So that is a part of the presentation I'm hovering around for you guys to see. That's operating expenses, right? We are still on that slide really before you go further. So for capital expenditure, right? Capital expenditure are not expenses you incur on a monthly basis, right? They are not recurring expenses. They are one-off. It typically happen maybe at some point in time within a financial year, right? And what you have, and I see CapEx as investing activity. So in this sheet, your CapEx will look like things like a computer for your staff, right? Computer for your staff, renovation facelift for your office space. You want to buy AC for your office, laptop for your staff. I mentioned it earlier, computer. Anything that is not recurring, that's one-off. Then you also need to think about where are the finances coming from? Is it from equity? Is it from loan? Is it from debt or whatever? So you need to establish where the money is coming from so that way you have those clarity. So if you understand these three stuff, then you can then go into using your simple Excel sheet. The first bit will be your cash receipt. Where are your cash coming from, right? So you itemize those from all the products you've categorized, right? Sales from your what's it called? Your clothing, from shoe, on a monthly basis, you put those. Then cash collection from debtor, that might not be applicable if you haven't sold, right? You need to add that to that as well, because at the end of the day, your revenue will be a combination of your cash sales. Your total revenue will be a combination of your cash sales, your credit sales to debtor who have not paid you, and other income. Then you would then add those together. Then I was talking about financing activities. Where are your funding going to come from? Yeah, you can also itemize loan and other funding that you expect to come from your partner, your investor. On a monthly basis, you can put that. If it doesn't happen on a monthly basis, just put it in the period where you're expecting the money. So by the time you had one, cash sales, cash collected from debtor, other income, your funding, where it's coming from, you have clarity on your total inflow in terms of the money you are expecting to come in. So in terms of your cash expenses, itemize all your operating expenses, your capital, your CapEx. By the time you add that together, you have clarity on what your spend are, if you look at this sheet. So if you minus the top line from the second category, you should be having things like a surplus or a deficit. Those are the area you then need to make some financial decision in terms of your cash flow, right? If your revenue is more than your expenses, right? It shows you have surplus, right? And that surplus means that, are you reinvesting the surplus into your business? Are you saving the surplus somewhere for you to be able to cover your payroll costs for the next 3, 4 months, 5 months, 6 months, 1 year, 18 months, and so forth? If you're having deficits, you need to think about, yeah, this is the area you need to make those decisions, right? Make those decisions and say, I'm having deficit, right? How will I cover the deficit? Deficit is when your spend is more than your revenue. What you project to spend is more than what you project to bring in as income, right? So those are the decisions you need to make as a business owner to say, how am I going to cover this gap in my, so are you talking to CEP for you to be able to raise funds? Are you talking to CC of investment company for them to spotlight you and put you on their platform for you to be able to raise funds, right? By the time you had all your total expenditure from month 1 to month 12, it will give you a sense of what your funding requirement is in the first 12 months, right? And you have a sense of where is the money coming from in terms of revenue in the first 12 months. And those are the things your investor want to see in your deck, in your financial forecast, as much as possible. If you are raising money from the bank, this is the document they want to see in terms of your cash flow projection document, your operating budget. This is what they want to see, right? And yeah, so we can move to the next slide. Let's look at the next stuff. Time will come for you to throw questions to me, and I will be happy to answer those questions. Yeah. Accounting system, managing assets, revenue, expenses. We talk about these processes when we started off, right? If you want to have a good financial management process, it's very important for you to think about all of these processes and how you can put them in order. That's one thing for you to have a plan, right? And when you have a plan, you will get to a point where you are implementing those plans. Implementing your plan means that you have to spend money to implement those plans, right? If you're going to spend money, what processes do you have to ensure that you are collecting you are paying your vendor on time, you are paying attention to your order, your inventory, right? Your bank account as well, the payment that are going out, what system do you have in place? Do you have a payment voucher system that says that for every payment that goes out, we will have a clear process where the admin staff will sign off on stuff, and when the sign off is made, then the CEO or the founder or the next line of person then approve. Yeah. You also need to have a system for managing your invoices, right? We've rendered service to a partner. What is the threshold? What is the period, the window to send invoice so that we can get our money in? So the rule of thumb is between a period of 15 to 30 days, ensure that you get all your money in as much as possible. If your client, your partner, customer is owing you for more than 30 days, you are leaving it all in your cash flow. And if you have inventory that you are keeping in your store for more than 30, 40 days, yeah, you are going to have a cash. What's the right word? I think the right word is working capital issue, right? Because you've invested so much in inventory that you haven't converted them to cash, right? It's very important you pay attention to that. Then payroll. I cannot talk about this, right? This is very important. You know, I don't know how much time I have to speak about payroll. You need to have a system to manage your payroll, right? It's very, very important, right? You want to know your head count, how much is costing you on a monthly basis, because I believe one of your biggest burn rates is coming, or your expenses is coming from your staff. So you want to have a system, and the system is called a payroll system to manage your staff payments. Filing report taxes when they are due, bank, ensure you are doing a monthly reconciliation periodically, because that's where you can spot any leakage, any, for lack of a better word, any fraudulent activities, any misrepresentation. Sometimes it could even be from the bank trying to debit your account unnecessarily. Inventory reconciliation, what inventory have we bought? How much have we converted to products? Finished good that we've sold, what is left? So this system are also very important. So internal control to manage all of this are very important. Now, I like to summarize each slide. On this slide, if you have an internal control that works, keep looking at it and keep improving on it. If you have a system, that's not working, it's better you look into it, improving. One thing I would like to mention to everyone on this call, this person is asking, may I repeat the point above? Okay, I'm assuming it's on this slide I'm talking about. One thing that is very important at every point of your business operation, look at your processes. The processes that you use during your startup phase might not be the one you will need during your maturity phase, because at that point you've grown and you've evolved. So you can't use the same process, right, to tackle a different phase of your business life cycle. It's very important to look at everything, look at what works, what is not working, and how you can improve on them. Don't just rely, oh, we have this system. And I'll give you another loophole of financial management system. For every system you create, you are creating a loophole, right? So it's better you keep looking at those systems and look at ways for you to improve them as much as possible. Yes, we can keep moving, and let's see. Yeah. So at this point in time, I think we'll spend the first 54 minutes trying to present the slide, helping you guys understand. Now we want to move into questions and case study. So if you've got a question for me, please. I think at the beginning we said you can type it out into the chat so that we can see. I'll start reading the chat and see if I can answer the question as much as possible. We will also look at the case study, and there's a link for all templates you can get as well. So let's see what we've got in the next slide. I don't think this session, okay. All right, so so at this point in time, I will leave the floor open so that you guys can ask me questions. But the question on this slide is, who has an area of financial management system in their fashion business or whatever business you have that you would like to improve on? So I will leave the floor open. You can grab the mic and ask question. Omolabake can advise on how best I can get all the questions and respond to them as much as possible. So I would like to start seeing what response would be, reaction to be to this question. Yeah. Should I go straight into my chat and read out the question and take them one by one? So
yes, Abiodun, please, can you do that?
So that's what I'm doing now, right in front of me. I'm going to the chat. Yeah. iDoStock. So the first question I've seen here is, please, may you repeat the point about iDoStock? So inventory item, or in other sector, they will say raw material you've bought that you are using to produce your product, right? And when you finish producing your product, the final bit of it, in terms of your finished product, you have them in stock, they then become inventory. So the principle with inventory is, you've invested so much in buying your raw material, right? You've used those raw material to develop or produce your goods, right? And when you produce those goods, you want to sell them or ship them to your customer as much as possible. If your iDoStock or your inventory stay in your store for a long time, then that's a problem. You begin to have a working capital issue, right? In terms of working capital, is a combination of your account receivable, account payable, right? The principle is you've produced all of these items, all of these products, all of these services, you want to sell them out, right? If you have produced them, then in your store, you are not selling them, you will have a cash flow issue as much as possible. So the rule of thumb is, within a period of 15 to 30 days, depending on the item you've produced, you want to sell them out or ship them to your customer and get cash in as much as possible. If they become idle for a long time, it then puts you in a bad position where you're having cash flow issue, and you don't want to be in that position, right? So you need to have a clarity in these products we are producing. How are we going to sell? How do we distribute it to customer? Distribution is out of this presentation. Yeah, connecting to your customers, selling your product. So I hope I've answered that question. So may you repeat the point about iDoStock? That's what I just explained. I don't think this session is for me. Oh, I'm so sorry if it's not for you. But the most important thing is the little you've gotten out of this session, see what you can make out of it. Yeah, so I don't know the intention of that message. So From TAM, we got SAM. How do we get the potential obtainable market? Good question. Now, to be realistic, you go from total available market, you go to SAM, and then how do you arrive at the obtainable market, right? So I will give you a good example, right? And this example might not apply to everyone. It may be applicable to businesses who are rendering service, right? It may be applicable to business who sort of sell services to their client and might not be products. But if you have any example around product that you sell, just put it in the chat. I will tell you how to arrive at that. So the best approach for a business, for example, that provides services to their clients or customers is think about your TAM, which is the total available market. Think about your SAM, serviceable available market. Then think about your serviceable obtainable market that you can obtain. So what I will do in a nutshell is, this is the market, this is my product, right? In my product, how many customers can ideally pay for my product? Let's say, for example, I'm into a project management, I'm a project management company, right? What I do is I project manage, I do consultant service to businesses, or I have a service that I have online that people pay subscription to subscribe for. How many of those customers can pay for those services, right? In that your region, in that your market, right? From the number of visits to your platform, you can already tell the number of people that are visiting your platform. Then from that data, how many of these are paying customers? Those are the aspects you need to spotlight. To say in month one, we have 100 people who have visited the site. From those 100 people, just 50 people have paid, right, in month one. So those 50 people are what you can conveniently obtain in terms of converting them from just visiting to paying customer. So for another company rendering, let's say, consultancy services, etc., what you need to do, and for any company rendering, producing products and selling to customer, all the items that you produce, right? How many units have you produced from this product? And then what is it called? The unit selling price of each of these products, right? You've done that projection. Then on month one, how many of your customers have actually paid you to sell those products to them, right? Depending on what the uptake is, and depending on what your pricing model is, like I said, your pricing model is going to determine how much of that market share you can penetrate. For example, think about your pricing model. If it's subscription-based, you need to think about all of the products you sell and which feature is applicable to which customer. For example, QuickBooks, for example, that is rendering financial management service, have different band of different products they sell. For example, they have, for you to be able to manage your books, you'll be able to generate invoice in one of their subscription. In the other subscription, they now said, okay, for you to be able to manage payroll, you'll be able to do your books and manage payroll, but the pricing will be different from the one without payroll. So think about things like that. Is it subscription-based? Is it, what's it called? Is it cost-based? So you need to understand all of these things, how much customers are willing to pay for your product. So there has to be a bit of market research on your own end to understand how much they can pay, who are your customers in terms of their personnel, and then what kind of demographic characteristic, their what's it called, purchasing power, etc. But the most important thing from financial management standpoint is to categorize all your products, your services in a tabular manner in terms of quantity. How much quantity can you sell on a monthly basis? Then you can then use that to compare against actual, how much people have paid, how many quantity have you sold. If you project to sell 20, you are selling 10, then why are you just selling only 10? What could have gone wrong? What can you bring? What can you do to make sure that you are able to sell your 20 in the subsequent month? What is the best app for financial management system? There's no right or wrong answer to this. In my opinion, it's a combination of two things. Number one, what are you hoping to achieve with the app? Number two, what is your budget? How much can you pay in terms of the app that are available out there? There are different apps out there. You have Wave, you have Zoho, you have QuickBooks. You have Zoro as well, has zero expense as well. So it depends on how much your budget is and what sort of finance operation are you looking to improve. So the common one that I think a lot of startups use in the UK, in Nigeria, in Kenya, in Namibia, so I've seen a lot of startups in this part of Africa use QuickBooks. At some point, Wave was very, ZoboBook is not very popular. So it depends on what your budget is and what you are looking to achieve in terms of automation of your finance operation. Please confirm the automated system you recommended. Yeah, in terms of automation, it depends on what you want to automate. Are you trying to automate your invoices? Are you trying to automate your payroll? Are you trying to automate your expense management system, etc.? These are everything ideally you should automate, because finance in this current day and age has gone from just someone sitting in one cubicle trying to punch number. You want to create a better experience for your employee, for your client, for your vendor, for them to be able to send you stuff, you render service to your customer. You want to be able to send invoice to them as quickly as possible, right? Automation can be automation of your entire finance operation. So he said, please confirm automation system. So in terms of automation, the same accounting software you've been using can also help you to automate a lot of your finance operation. Zoho, for example, if you don't want to stick with them with just Zoho Books, which you can use to manage your book, they also have Zoho Expense, purely for expense management. You can use it to manage your expenses, your travels, cash advance, expense retirement. It got a mobile version, it got a web version, so you can subscribe to Zoho. I think it's out there. I will try not to market any product. I'm just giving you apps that are out there. You can go and search. Zoho also have Zoho Project. They got Zoho People. The same thing with Wave, and I think they've scaled up a bit. They have parts to manage expenses, etc. QuickBooks, if your priority is to automate your bookkeeping process, I think QuickBooks is the best. If your priority is to automate both your financial management in terms of your books and your finance operation in terms of your experiences for finance expense management, what's it called? Your travel, you want to automate that. And you want to make this real time in terms of uploading invoices, in terms of approval flow for your CTO to approve, your CEO. I think Zoho Expense might be able to help you solve that need or solve that problem. Yeah, I hope I've answered that. Can you please define financial model again? Good question. So there are two things, financial and model, right? Let me start with financial, right? Financial management or finance is, in a layman word, is having an understanding of how much money you intend to generate as a business and how much money you intend to spend. It's about your finance affair, right? Money in, money out. Then what is a model? A model is you have an abstract idea. You're trying to represent it in terms of reality, right? That is a model. Then what is a financial model? Financial model is a representation of your financial projection, right, in a very clear and a very concise document, right? It could be Excel, it could be what's called a pitch deck, it could be whatever document you have. So it's just a representation of your spend and how you intend to generate your revenue. Another definition for financial model is a representation or a quantification of your business idea or your business model, quantifying that in a very concise and clear manner and putting that in a document that that can be easily reviewed and that can be used as a living document to guide your operation periodically on a monthly basis or annually or whatever. So financial model in a nutshell is a document that helps you understand your expense forecast against your revenue and help you make decisions around where's the money coming from, and if money is not coming, how do you plug whatever cash gap you have? The other question, your analysis throw me off. Okay, what part of it throw you off? So in terms of analysis, what part of my analysis throw you off? If you can let me know, I'm happy to go back and explain to a layman perspective. Not sitting on so stock, I don't understand that. Please kindly share example of free, efficient, and easy way to use financial operating system. So let me explain that. What is financial operating system? Financial operations has to do with all your finance activity coming from account receivables. Account receivables has to do with your invoicing. Account payable has to do with the process you have in place for paying your vendors, etc. What else again? Your payroll management, right? Your tax remittances, etc., risk management, everything. So there's one part of my slide that shows inventory, bank, and all. That's a financial operating system, right? Having system that helps you manage account receivable, account payable, your cash flow, your taxes, etc., is now defined as your financial operating system, right? And in terms of your financial operating system, you can have a financial operating system manual where you employ new staff, you can give the manual to them for them to read, to understand how you do your budgeting, the processing for payment approval, etc., right? So your system can also be documented in a written policy, and it then becomes a financial operating system manual. But in terms of financial operating system, those are what I've explained. It's a system that helps you manage all your finance operation from end to end, from account payables, from your inventory down to whatever you have in mind. The next question: for a fashion business, is there a ratio or formula can work to balance out goods in store and inventory at hand? Yeah, good question. That's what we call inventory turnover, right? You can go online and Google that. Inventory turnover talks about your ability or how quickly you can convert your inventory to cash, right? A very low ratio means that you are very efficient in converting. Let's say your inventory turnover in terms of days, let's say it's 30 days. 30 days is a bit reasonable, right? But if your inventory turnover ratio is like 40, 60, 100, 180 days, that's a problem, right? That means you are investing so much in your inventory and you are not converting to cash. That's one ratio I could explain to you. There are several ratios out there. Working capital ratio, there is account payable. So it's a lot, because your inventory in your balance sheet is one aspect of your fixed asset. It's called current asset, right? It's how quickly you can convert your inventory to cash. It's also a way of measuring your efficiency as a business. I've answered that question by saying your inventory turnover in terms of date is one ratio you can use to manage or you track your inventory. Record keeping and analysis. Okay, in terms of record keeping, what is the question? Right, record keep. Let me answer it to the best of my knowledge. Record keeping has to do with your bookkeeping. If you're already using Zoho, if you're already using QuickBooks, you can use that for your record keeping. In terms of analysis, what you want to do in terms of analysis is all the information you've taken from your books, right? What insight can you gather from that? One of the analysis you can do is variance analysis. We have a budget, we have the actual. The difference between budget and actual will give you variance, right? And you have a budget, you have a spend. Your actual spend divided by your budget can give you your burn rate ratio, right? Those are analysis you can do. Several analysis again can be your gross profit margin, right? Your total revenue, remove the cost of you generating that revenue, you get your gross profit margin. That's one analysis. Another analysis would be your net profit margin, your revenue, remove all your expenses. Yeah, what is the net in terms of what you have sitting in your bank after taking all your expenses? Those are analysis as well. So there are several analyses you can do with your record keeping that I think is very important. It is rarely 30 days. Rarely 30 days of what? So it's, I don't know what that means. If the person wants to clarify, I'm happy to answer the question. I would like to improve on reducing expenses. Sales are slow, but there is need for fresh stock. So I end up spending on making fresh stock, and then it sells slow again. Oh, sorry about that. So the first question we need to answer in this stuff you've raised is, why is your sales slow? What insight have you gathered from all the data you have? It could be that your pricing is faulty, so you need to go and check your pricing model. Maybe the customer in your sector are not willing to pay, because I think I came across an experience with a startup that has similar issue, but I don't know the sector you're operating for. If it's fashion, of course, fashion could be seasonal. For example, in the UK, we are now approaching the summer. A lot of stock that you have in the winter might not be, may or not be sellable during summer, because people will be looking for different fashion stuff to buy, right? So they can be out of stock at that moment. So if your stock are slow, you have to look, it's a combination of several things. Why is your stock slow? Why is customer not paying for it? Is your pricing so high that people can't pay for it? That's one question you need to address. Number two is, from all the sales data you've collected, you need to look at which month do you make the actual sales, and why was that month so high in terms of sales. So look at those data, gather whatever insight you can gather from it. But I think just looking at your question, if sales is low, it's a combination of your pricing model, it's a combination of what people want at that prevailing time. If you are spending so much, end up spending so much making fresh stock, why are you doing that without learning from the slow sales you are experiencing? So you need to go back, look at your data, gain insight from them before you then produce fresh stock. So it's very important you look at that before you keep investing your cash flow or your working capital and producing more and more goods. Yeah, it's very important you look at that. Yeah, so I hope I would like to control the cost of production. Yeah, I can talk about cost of production. Cost of production is same as cost of sales. What goes into cost of production, right? And this is a very fantastic question you've asked me. Whoever asked that question, thank you for asking. Cost of production are all the expenses that has gone into producing your item. Let's say if you produce phone, for example, everything you've bought to produce that phone, yeah, in terms of the expenses is called your cost of production, right? To control your cost of production, it depends on what you are producing, right? At what point are you producing? Yeah, there's something we call unit economics, right? You get to a point where you are producing in large quantity. You want to then leverage on the fact that because you are producing large, the unit cost will not be that high. At your early stage, when you are producing few stock, the unit cost will be high because you are not able to transfer a lot or distribute a lot of the cost among several units. So in terms of unit cost, another vague way in finance you can control cost is look at the vendors who are supplying your raw materials. Do you have the best vendor in terms of quality and in terms of the price they are giving you? So rule of thumb would be look at several vendors, maybe 3, 4, and look at the one who is giving you the best value for money and go for them. And look at your current spend, right? There might be area where you are spending that is not necessary. It could be one area for you to see how you can phase out any redundant spending in terms of your cost of production. Don't forget, if you take your revenue minus cost of production, you get your gross profits margin. If your gross profit margin is negative, just know that you are not in a good business, right? So your gross profit margin, depending on the business you are, should be between, let's say your cost of production should be, let's say between 30, depending on your industry, can go up to 50%, though you should have 50% left to then cover operating expenses and any other costs you have. So I hope I've explained that. French, I would like to learn how to better manage my entries and exits. I really don't know. By entries, I don't know. By entries, are you entering a market? Or are you entering a market and leaving a market? Or are you trying to, is it by entries, you mean entries of your book? So it's not quite clear to me in what context. Entries and exits could be you entering a market, leaving a market. So, or it could be investment, right? Entering, undertaking an investment and exiting it at when due. So it's not quite clear to me. Perhaps you want to clarify that. Okay, I have a lot of difficulties with my accounting sales. with my accounting, sales are increasing, but I always find myself in deficit at the end of each month. Fantastic question. I'm happy that a lot of people on this call are asking me practical questions that is affecting their business. I'm sorry to say, not everyone will find this section connect to them. It's normal. I'm not ashamed of that, but the most important thing for me is to be able to support people who genuinely need this section to improve their business operation. So it's very, very important. And I'm going to spend time explaining that as much as possible in a very slow manner. Apologies if I'm too fast for you to understand. Yeah, please. I have a lot of difficulties with my accounting sales, and accounting sales are increasing, but I always find myself in deficit end of the month. Two things is happening there. Number one, if you find yourself in deficit, it means you are spending more than you are generating in terms of revenue. So you want to pay attention to your spend, right? Look at your spend again. Which area are you spending the most? How can you reduce costs in those areas? Number two, another way you can go into deficit can be, oh, you render a lot of services. It might not even be deficit to customers are not paying it on time. So you're in a cash flow position. Maybe you are short in cash and etc. But deficit in the context of your question means that your revenue is less than your cost. That means your cost is greater than your revenue. So I will address that deficit. So, and it could be a combination of the investment you expect in your business has not come in. So look at your cost of production, your cost of sales, and your operating expenses. There might be costs or there might be area you're overspending. You need to look at that. And if there's need for you to trim some of those costs, it's very important you do that. During the pandemic, a lot of businesses started asking this question. And what I worked with a number of them to help them look at costs that then became redundant when people started automating their processes or working from home, and they were not heavily working from the office. So a lot of expenses were redundant. So you need to look at your spend and which area are you creating that linkage or wastage, and try and see how you can address that, right? At the end of the day, cash is very important. Your ability to generate cash puts you in a very healthy cash flow position and so forth. Yeah. Time is fast spent. So let's look at this. No, let's go back to that slide. Yes, this is the case study we need to look at. So can you look at this slide and tell me what is wrong with the finance function of this business? So with this, I'll be able to advise you and give you insight on how better to manage your finance team or your finance operation. So yeah, please, quick one. This is a case study of the finance operation of a business. And the finance operation of the business, ranges from account payable, account receivables, corporate treasury, cash flow management, financial planning, financial reporting, etc. Right? What is wrong with this finance operation of this business? Please, I want to see your response in the chat. And I think this applies to a lot of businesses, and we will see how we can quickly respond, and I will give you insight on how to better improve your finance operation. So can you respond and tell me what you can see? Account payable is way higher. Yes, correct. Account payable is too high. Yes, correct. Other response, the business is not going to make profit. Is that profit? The business is not going to, okay. Correct. So let's keep going. Okay. So which other response or which other insight have you seen from this chat that's up? Okay. Yeah. Plus spend. So that person is saying expenses will be more than profit. Yeah. Account receivable just slow. Okay, strategic financial management is very low. I like that from Kende. Taxes are too low. Business operating, that's okay. Financial strategy is very low. Okay, very minimal financial planning. Yeah, very minimal. Yeah, yeah. compute payable, yeah, it's high. What else again? What account receivable is low? Yeah, meaning the profit margin is low. Yeah. Financial time spent on, yes, I like this response from Kawira. Yeah, it's about time spent. Yeah. Yeah, so financial planning, yes. So I think the response from Kawira, yeah, is what we dwell on. Everyone has responded in a very fantastic manner and like all the response, right? And if you look at this business in a nutshell, you will see that they spend a lot of time on an account payable. It means that the system of this business is mainly manual because they spend 50% of their time processing vendor payments. So imagine if they can automate account payable, they can reduce this 50% to about, let's say, 10 or 20%. So I'm looking at the operation from the perspective of time spent by function. So it means that this business spend a lot of precious productive time doing manual paying vendor payments manually. So if they automate, the 50% will go from 50 to about 10 to 15%. Account receivables as well, the business is not chasing, yes, a lot of people answer this correctly. The business is spending less time in chasing payment. So it means that, yes, cash flow might be a problem because they will have done a lot of work and not collecting money in. Financial planning and analysis, you can see it's just 2%. Financial planning and analysis is very important in this modern day, right? Because that is the only area you can gain insight from your finance transaction, right? That's something we call financial governance. How you use your financial information to make informed decisions. So this one has to increase to about maybe 50 or 60% because that is the critical bit of financial management. It's not just about keeping the books and all. Financial reporting as well, yeah, it's reasonable, 15%. Project billing and etc. Project billing needs to be strong, right? Strategic financial management system, yes, the business has to be strategic. If financial planning and analysis is, if they spend more time on financial planning and analysis, strategic decision will be done properly. Tax management, the company also needs to pay attention to that as much as possible. So thank you for all the response. So we can move to the next slide. But the bottom line in this is finance has gone beyond just routines. It is now more of a strategic area of every business because it connects all the aspects of any business, right? Human resource, procurement, excuse me, etc. So it's more strategic than just someone sitting in a cubicle and punching the number. Looking at the typical, yes, I think we've already discussed this, so I won't waste much time on that. So the bits around moving from spending much time on account payable to becoming strategic and spending much time on financial analysis will make the business very resilient because they will see stuff before they happen and prepare them for any bad period or any period that is not very good. So more time needs to be spent on strategic stuff and financial planning and analysis. What changes, key driver, do you think is required to restructure the finance team? They need to move away from manual to automating the system, right? That is very, very important. And also the company needs to also spend more time on the analysis bits to gain insights from financial data and then be able to make informed decisions. And I think that is very, very important on that case study, moving away from routines. So these are all the templates. If you have come on this presentation and everything is fast-paced, you didn't really grab everything. From the little you've grabbed, go and apply it to this template. And I'm sure from what I've said, you'll be able to walk yourself through or navigate this template one after the other. This is the link. You will see statement of financial performance, help you to track your spend against your revenue, position in terms of your cash flow, your cash position at every point in time. Even your budgeting, there are a lot of templates in there you can download. And I think that brings us to the end of the section. Thank you to everyone who has taken the time to listen, to participate, to give feedback, both good and bad. I've taken all the feedback And we'll keep moving. Thank you so much, Omolabake and the CEP team for having me. And I think that will be the end of the section. Thanks a lot.
Thank you very much, Abiodun. Yeah. Fantastic session it is. I understand that anything that has to do with numbers and finance can be such a, how do I call it? A very cumbersome task, especially for a lot of us that don't like numbers. People like me that don't like numbers, it just feels like they're saying Cambridge. So it's just normal for people to get bored, for people to just get tired when you begin to see numbers, talking about this terminology and that terminology. So yeah, in all, it was such a fantastic session, and I'm sure that the participants actually learned one or two things in today's session. Yeah. I know that there were a lot of questions that kept popping in while you were facilitating that we could not take because of time. Yeah. Please, if you have any questions that you want to ask, or in the course of the session, you ask a question and Abiodun could not answer them, please do well to just send your questions to Fashionomics Help Desk at cchub.africa, and we'll forward your questions to Abiodun and we'll forward the responses back to you. So please do well to just send your questions. I'll be more than happy to take them and send your feedback. Okay. Oh, somebody said you are as simple as possible and patient. Yeah, thanks. Yeah, I understand. Year in, year out, we understand that numbers could be something else for a lot of business owners who are not used to paying attention to their numbers. So it's expected. Okay, today is going to be the last session for today and for this week. Please note that classes will resume again next week, Wednesday. We're not going to be having a session on Tuesday, so sessions resume again on Wednesday and on Thursday next week. The WhatsApp group will be opened up today for our networking session and for you to share your key takeaway from today's session. Please do well to follow through with it, and yes, and then drop your key takeaways. I will be more than happy to read from you. If you have any challenge or you have any query, please do well to send us an email on Fashionomics Help Desk at cchub.africa. I will be more than happy to respond to you and provide solutions to whatever it is that you need us to solve, especially when it has to do with Moodle, or you have questions to ask, or you need clarity regarding the program. Today we had our 11th session, meaning that we have 5 more sessions to go. So I want to ask, are you preparing for your exams? Exams are knocking. So please do well to start reviewing your notes. We'll continue to upload all the videos. We'll do well to upload all videos before the exam day. We'll do well to upload every video before the day for the exam. Please note that. And just keep tab with it. Can we have yes, we'll have videos before the end of this week, but maybe not all, but we have from session 1 to 5 on Moodle. So most likely you have session 6 today and probably session 7. So please be on the lookout for videos. Thank you very much. And please, if you have not filled the Midline survey, please fill the Midline survey and let us know what you feel about the 8 sessions that we have done previously. I see someone asking questions. How do we assess Moodle? Please send us an email on Fashionomics Help Desk at cchub.africa. My colleague Wanjiko will do us to type that out. Fashionomics Help Desk at cchub.africa. So please send us an email if you are requesting for Moodle login details. Please send us an email. Aside from that, please also note that for those of us that are asking for Moodle login details, please go check your emails, check your spam email, promotions, socials, or your inbox. We have sent you login details way back, I think 2 weeks ago. Please do want to check your emails. Please, before you send us an email, check your email to see if you have seen the login details. If you cannot find it in your email, please do want to send us an email on Fashionomics Help Desk at cchub.africa, and be more than happy to respond to you. Please do well to check it. Moodle doesn't have a link, so there's a link to access it, and you need your login details, your password, and your email address to be able to access it. So please take note of that. All right, we'll continue again to catch up. Yeah. Orunti or Legua, please send us an email. My colleagues will do well to attend to you. Mildred Agu, please send us an email. My colleagues will do well to respond to you. All templates and all additional resources from the sessions that we have had this week will be sent to you on WhatsApp. Please, let's take note of that. Thank you very much, everyone. and do have an amazing week. For the Christians, enjoy the Easter holiday, Monday and Friday. And for the Muslim faithfuls, happy fasting.